New day of the new month. So no matter what happened, whether it was amazing or if it was terrible over the last month, it's behind us. It's a new day. We go forward from here, right? So can always start fresh. Just reminding you of that. It's been an amazing time in the market, guys. It's been absolutely an amazing time in the market, and I start out with that because I had a guy come by yesterday, a friend of mine in the neighborhood here. We were talking, and so many people right now are just absolutely singing the blues about what's happening in the marketplace because they don't understand how to trade within it and do longs or shorts, and they're just watching their portfolios crumble down. And I told him, I said, hey man, tomorrow's a new day. It's a brand new day. You can take a different action instead of just watching your portfolio, continue to go down. Look at trading in a different manner. There's different ways you can trade it, which is what we talk about here, right? We talk about simple strategies that actually work. The simple things that work. That's what it's all about, the simple stuff that works. It does not have to be complicated. We just have to take action. Now, I've talked about before, it's really easy to say that rather than do it. So how do you take action? What is the actual plan? Well, it comes down to having a plan. You've got to have a trading plan in place, and you have to have the mental fortitude to stick to that plan. It does, especially in times of turmoil, in times when we form biases about what we think should happen. If we trade outside of what our trading plan is, and then we feel a need to, quote, get it back, we can do a lot of things that aren't in our best interest. So it's really important to have a plan, work that plan, stick to the plan. Practice that plan in maybe a demo environment for a while before it's actually live money on the line. There's a lot of things that can be done. I think a lot of us know what we should do, but we just often don't do it. And that's in all walks of life, in all areas of life, not just here in trading. But let's talk about the trading aspect of it specifically. What we're going to do today, same thing we do all the time. I'm going to run through the markets. So we're going to talk about what's happening in Forex, crypto, and futures. And then this week, what I had talked about at the end of last week, I had an internet outage, by the way, on Friday. I started to do a live stream. I got like 3 minutes into it, everything froze up, and then I was down until 2 o'clock in the afternoon. So that's why you didn't hear from me on Friday, by the way. But anyway, last week we were talking about what I'd like to do this week is spend a week, each week, on a specific trading plan. And the purpose of doing that is I've talked a lot. When I first started the channel back in the summertime, I was just putting out the trades I was taking, which I think is good. People like seeing that, but at the same time, it's a violation of some regulations that can't be done when you don't hold certain designations. A lot of people do it. They put themselves at risk at doing it. So then I just kind of moved over just more talking generalities about the market and stuff. But I think we're at a place now where it's good to start digging back in and doing some actual training on specific methods. So this week, we're going to talk about breakout strategy. That's going to be the focus this week. And then next week is spring break, so I won't be actually even here. So I might do a live stream here and there. We're heading out of town for a bit, going down to the beach for spring break. So I may not do anything next week at all as far as trade. In fact, I won't next week as far as trading. We're not going to even be looking at the market. I won't be talking. I might touch base with you guys, but I won't actually be looking at the markets. Then the following week, we'll talk about bounces. And then the following week after that, there's another strategy that is kind of a combination of the two that we'll talk about, which I think is really, really interesting. And you might find to be a suitable trading style, especially if you're more of an intraday person. So anyway, let's get to it. So the plan today, I'm going to run through quickly, just talk about what the markets are doing, what we're looking at, some key levels. Then I'm going to switch gears and we're going to talk about the basics of breakout strategies. And then tomorrow we'll actually place a couple of breakout trades. But I want to do the basics on what a breakout is, why it works, how it works, before we actually start looking at actual trades on it. So let's go to it. First thing I think I can start on this screen right here is the foreign exchange market. It's been tough. Forex has been tough during the U.S. session for the last few days. We had one or two trades last week looking at that breakout strategy at the open market momentum, right? This week, however, or even most of the days last week and then today, kind of a similar thing, we're seeing really wide movement prior to coming into the U.S. session. So potential for movement, we've kind of ranged out a little bit. It seems like there's always opportunity. I don't want to say that there isn't, but for me, I look at the likelihood of it. So if something, for instance, like the pound New Zealand, typically has a range of 180 pips. It's moved 306 today. Does it mean there won't be movement? Yeah, I mean, there may be retracements on it. There may be some opportunity there, but it's just it's not as opportunistic as I'd like to see it, right? I mean, you get into these days like this where you're coming in and the markets have already moved to or beyond their typical ranges. You can start looking for reversals and you can start playing things that way. But what is the real opportunity to trade with that trend, and how much is there an opportunity for it to continue to move is what I look at. And when I see that, there's just not really an opportunity in my mind for at least the strategy that I'm applying here. Now, is there other opportunity to trade? Yeah, all day long. But talking about the specific market open breakout strategy that we talk about on here, which would be something like, let me just pull this over here, something like this, looking for, as the market opens, playing both sides of that all my thoughts are right out of my head. As the new market session begins, placing a buy order or a sell order, then we see opportunity there for it to potentially move. And the goal behind that is to take advantage of the momentum coming into the market and being able to trade in the direction of that current trend as that new market session begins. However, when we get to these days like this where we moved 120 pips on an average of 120 to 80, as low as typical ranges really before we had those crazy outsized days, we're in that 80, 70 to 80 pip range. So is there opportunity for it to move beyond that and get to the edge of what that risk would be? Sure, maybe, but how likely is it? And it's not as likely. We've had some really different market conditions, especially over the last 7 days now, as the other markets have just fallen apart. So for me, I feel like we'll just step to the side and let this thing do what it's going to do. So from a Forex perspective, as far as new trades coming into this new session, I don't have anything here to talk about. I do still like, the breakout opportunities are there, but I just don't see it as prevalent here over the last few days as we've come into the U.S. session, just simply because of the movement. So for that trading style, that trading method, that process that we were talking about here, I'm again just going to pass when it comes to Forex. Over in the futures market, pulled up the wrong thing here. Let's go crypto first, since I'm on that screen over here. Crypto continued just falling off the cliff over here. Continued pushing down. Ethereum, Bitcoin, very similar. Very similar chart patterns here. Have definitely, we've hit kind of a little bottom range, it looks like, for Ethereum. We seem to have hit, potentially have found the bottom down here around 215. Right now, we're trading in a channel right in between 220 and 230, which is a pretty darn tight channel right here. We are in a downward trend here on Ethereum, so do with that what you will, but the thought when we're in a downward trend would be to either look to sell off of key levels or wait and sell a break through that bottom area. So you can either, if you want to play the bounce, we could look for this to come up to this 230 range and then sell off of it, or you'd look at 220 as your bottom edge and look for the break below that as your sell. So a breakout on this would be looking lower than 220, because at that point you'd be trading with that trend. It would have reversed out, and then you'd be trading with that trend. Same for Bitcoin over here. Bitcoin's broken now down back below 10,000, as of days and days ago. So here we are, similar situation. We're in a downward trend. We have a key level up here, 8,900, or really 8,900 probably would be our key level. But even a little bit higher, if you look to 8,990, so 9,000 right here. Looking at these levels as that potential bounce area, because we are in a downward trend. If it pulled back up to that, we could look to sell off of it. Or the flip side would be to look for a break of 8,500 if it moves back through there, and then take it short off of 8,500, right? So that's what we'd be looking at for the crypto side of things over here. And I haven't looked a lot at the other. I do track other currencies here, and I haven't talked about them at all. I'm sticking, when we talk about these things here, I'm just sticking to the majors. The Bitcoin, Ethereum, they're very heavily traded. There's a ton of volume, there's a ton of liquidity. As you get in, and there are in these others as well, but as you get into some of the other alt currencies, the liquidity really drops, and you don't find the same trading opportunities as you do as far as being able to get in, being able to get out, being able to find a reasonable price with a reasonable spread. You don't find them as much as you do here with these two, quote, major ones. But we'll see where it goes. But right now the trend is down, and we'd be continuing to look short. Whether again that's a short bouncing off of a high, or waiting for it to break down below a low. And that's where we'll be going this week as we talk about breakout trading. Popping over to the futures market. Let's go here to the futures market. What's going on? What I wanted to talk about on Friday before my internet went out was the fact that on Thursday, we were looking at, we had talked about in the morning session looking for key levels here. It could not have been a more textbook move where this came up to the top, couldn't close below it, retested, and then went lower, right? Pretty darn textbook there. Same thing though, looking here on Friday and now today, we have these levels have been on the chart for quite some time. They're not anything that's brand new. These have been posted here as the market was climbing, and now as the market's falling, we're seeing the same levels pretty well respected. Looking back here, bounce off of a key level, break, bounce, holds around a key level, comes back, respects it, bounce, 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 bounce. It's not anything I just put on the chart. It's all been existing. That's because when you have and this is the difference between foreign exchange and futures or stocks or anything. The others, foreign exchange is a utilitarian market, and while there is some level of predictability to it based on human emotion, there's also the utilitarian side where orders come in and just changes direction or changes the market sentiment without to a place that was kind of unexpected. When you look at the futures market, for example, which is purely speculative, it's more driven by human emotion, and when you have human emotion involved, all of those things, support, resistance, key areas, key levels, looking at more technical indicators, they all play a much larger role, and that's why you see those things repeating and being a bit more predictable. So anyway, give me 1 second. My wife had something that she told me to watch on in the oven that she's making that she started ahead of time for lunch, and it's beeping at me, so I've got to go turn it off, and I'll be right back. All right, I'm back. Sorry about that. She said, "Hey, don't forget about the potato," and then I just started what I was doing and forgot about the potato. So, so anyway, Futures, yeah, the futures market. So let's pop over here and have a look. Over here on E-minis today, so we're in for Monday. We had, over the last 5 market days, we've just fallen off a cliff, right? Actually longer than that, 7 market days. We've just fallen off a cliff here. It really brings to mind that old adage of up by the stairs, down by the elevator. Could not be more true when we look at that. Anyway, so here we are today. We're in a downward trend, continuing in a downward trend, but the market kind of on Friday seems to have found a bit of a bottom here. I would expect that we'd see maybe what they call the dead cat bounce. We may certainly see a little bit of a pullback here until we get some more news that everyone panics on. So what are we looking at here on the E-minis? Well, we've got some key levels. We have our opening, our prior close, which is sitting right here at 29.50, and we're kind of playing around, hovering around that area right now at 9 o'clock U.S. Eastern Time. The regular market session goes on here in about 30 minutes. So we've got a key area that we're flirting with right now, and it'll be interesting to see how price closes around that, and then what happens in that first half hour of trading with the new market. So if you're and let's just go ahead and get to, because I'm running short of time. I've been going longer than I wanted to go in order to get to this point. Well, let me just finish this up. So key areas here, key levels to watch. We're in a downward trend here on E-minis, right? So if we pull back to, let's say, this 3,000 area, this seems to be the top edge right now. It was respected on Friday, and now today under off market hours, it's pulled up to 3,000 and pulled back off of that a couple of times. So 3,000, we pulled up to 3,000, that would be a potential opportunity to, if you're trading with the trend, to be able to sell off of that. Otherwise, the bottom edge is down here at 28.80, 28.85. Is where we'd be looking at. Over on crude, it's certainly gone lower. I remember a couple days ago, I said we were looking at, people say, well, we may have found a bottom edge. How much lower can it go? My response was as low as it needs to. It's fallen from 50 down to 45. So the trend is still very much down here on crude. I don't even have any support resistance areas on the chart, but if we were looking at any, we'd be looking straight across here, right through here at 46 as that potential area to sell from with the trend, and then 47 would be the next level up, 48 beyond that to look to be able to sell off and trade with the trend on crude. So again, just trying to trade with the trend, we'd be looking for selling opportunities. Now, whether that's again, if you're looking to sell the bounce as it pulls back to these key areas, or the flip side of it is to wait for it to break below a level and then sell as it breaks through that. So the bottom edge right now is setting up as that 44.50 area right down here. So if we were to push down below and break below that, that could be a nice opportunity for us as well. Gold has been in an upward trend, although last week gold sold off quite a bit, and it's in a downward trend now as well. I've mentioned before, I have a really hard time selling gold, but it is what it is. The trend over the last couple of days is down. Do with that what you will. If gold isn't something that you believe in selling, just don't trade it. The flip side is to look for breakout opportunities. And here on gold, you do have a little bit more of a channel that's developing for the day so far. If we look at an intraday level here, 1610 as a top, and you've got 1590 as a bottom here. So looking at kind of a channel area, let me just draw it in. Kind of channel lining up here and here on an intraday level. So little inside of what my key areas are. but there's definitely a channel developing here between 1610 and 1590. So looking at breakout opportunities, we'd be looking, if it breaks above 1610 to take it long, and it breaks below 1690, 1692 to be able to take it short. The trading with the trend would be if it breaks below, obviously taking it short, because that's the trade with the trend. The 1610 would be a quote a counter trend trade, but a lot of that really is driven by this one trading day right here where we had that big sell-off. So it'd be interesting to see where gold goes. So let's talk a little bit about breakouts and breakout trading and what it is. Breakout trading is the process of finding a channel where you've got a instrument that's trading kind of in a flat channel, and then you're looking for that opportunity where it breaks out of that channel, either up or down. That's what a breakout is. So you're looking for it to break out of a channel. It's like playing Pong, right? Bing, it goes, right? That's what we're looking for in a breakout. The process of trading a breakout is you'd be setting up a buy stop at the top and a sell stop at the bottom, right? We're waiting for it to break one of those to get through here, and sorry, just watching this. So you're waiting for it to break that level, and then it keys you in. Is ultimately what we're looking at doing there, and you want to set your stop loss and your take profit as you're setting up that trade. Breakouts work for a couple of reasons. One, you're trading with momentum. So if something's been sitting in a tight channel for a period of time, and it has a typical range that's greater than whatever that channel width is, at some point, and you don't know when, and you don't know which direction it's going to go, at some point it's going to return to its mean, right? So if you're sitting in this channel and you've got, let's say, an instrument that typically trades 20 points on an average move, and you're sitting in a 7-point range for an extended period of time, it's going to break out of that one direction or the other. You don't know which direction, but it's going to return to its mean at some point. So by trading a breakout, you're taking advantage of that momentum and then letting it go. Now, the challenge is, like, let's say we're just talking about E-minis. If we look at E-minis and we say, well, today we've got a top at 3,000 and a bottom at 2,900. That's a 10-point range. That can be pretty expensive. So would you set your entry at 3,000, and then you'd have to find a take profit point that's at least 1.5 or 2 times beyond that? How likely is that to move? Is that a great breakout opportunity? So some considerations when we're looking at breakouts is A, how tight is the range? B, what's the typical movement of that instrument that we're planning to break out on? C, where would we be placing our stop loss and our take profit? And then D, how likely is it for that instrument to move that distance? Are we able to truly recognize those opportunities? So what I want to get into this week is doing a bit more of that analysis as to, A, how much can we risk? If you were trading a breakout on, the E-minis, would you put an entry on with a stop loss that's 10 points below it? That'd be very expensive. Maybe not. Maybe you'd look at you can take into consideration, as opposed to just putting your stop, your entry and your stop, at the top and the bottom of that range. You could go into more of, based on the time frame that you're trading, based on the time frame that you've identified that channel on, maybe it's a 5-minute chart, if you've identified that channel, what's the typical range for that trading period? What's the ATR, not the ADR, what's the ATR, the average trade range for that period that you're trading in, and then utilize that or some multiplier of that as your stop point, and then also as your take profit point. Because remember, we really are only measuring our take profit against our risk. So if we're risking 1% and that 1% happens to be 3.5 points of risk, 3.5 points to get to that if it moves 3.5 points against us, we're risking 1% of our account value, so that's X number of lots. At that point, we're looking for it to move 7 points the other direction in order to lock in. That's 2 times the 3.5 points of risk, right? So utilizing, and we'll get more into this as we start actually placing these trades on here, but utilizing the average trade range, I feel like is a great way to be able to take part in that breakout without also having to take on the risk of that full channel, right? So we're playing that momentum of it breaking above or below a certain level, but at the same time we're calculating our risk based on the average trade range. So if it does break through with some momentum and come back a little bit, we're giving it room to move based on how it typically moves, but giving the emphasis on the breakout of that channel so that it can move, whether that's up or down, continue to move in our favor. I've got some tools actually on the website that'll help with that. So tomorrow, what we're going to do is, I'm already at 30 minutes. Tomorrow what we're going to do is we're going to pull up MT4, and in MT4 you can actually trade not only currencies, but depending on where in the world you are and what broker you're with, you can also trade the S&P, you can trade crude, you can trade gold, and we'll be able to look at those with some tools that'll allow us to start placing these breakout trades. And what we're going to get into is identifying the channel. So let's identify how do we pick a channel? How do we know when it's in a channel? How do we identify a channel? And then how do we actually set up those trades? How do we place that stop order with the take profit, with the stop loss, and just build that trade out? So that's what we'll be doing tomorrow. But a breakout trade is exactly that. You're waiting for it to break out of a channel, and then you're counting on that momentum of a break to be able to push you into profit. The other thing with a breakout that makes it effective, if you're trading it, is to have that fixed take profit point, but be able to ratchet off your risk quickly. If you're using a take profit point that's 1 times your initial risk, let's say, there's a way to manage it, taking off risk pip for pip or tick for tick in the futures market, that would allow you to always lose less than you win. So whether it's a fixed stop loss and a fixed take profit, or if it's a trailing stop loss with a fixed take profit, we'll talk about those strategies as we get further in to discussing breakouts this week. But just the basics, we talked about what a breakout is, the theory behind how it works. The reason it works is because typically you'd be trading with the trend. So we'll talk a little bit more about that as well. Breakouts with the trend versus just breakouts of a channel, depending on which direction. So a lot to cover as we go through this week, but each week a little portion of this morning update is going to be dedicated to talking about those breakouts. One thing I didn't cover today, which I'll bring up now over here, is the NeuroTech trader. And over here on NeuroTech, we'll be getting into this as well. I've just put this into the members area last night and locked it down. I have not sent out that email with the video about this, and my plan is to get that out to you guys today. I was talking to Kostya over the weekend and just making sure everything's buttoned up. I will be putting, for those of you that have already seen it in the members area, I will be putting out today some setup videos. just so that you can walk through the initial part of setting it up and getting it started. And then from there, tomorrow, the setup video, we'll talk about how to do the initial learning as well. And then, we'll be having some dedicated classes specific to the NeuroTech Trader software and utilizing it. But for right now, we just entered a new time period. This was in a CAD short that had taken a little bit of a loss on. It was having us close it out for 8 o'clock. Let's see what it talks about for now that this 8 o'clock area has closed, what it's thinking for the next bit here. So it's flipped over to long, and it'd like us to enter on the next hour, which would be 9 o'clock. And we'll talk more about how we can utilize this at the beginning of an hour or at the end of an hour, and some ways to trade it as we get into talking specifically about NeuroTech and utilizing NeuroTech, especially for the folks that end up utilizing this software with me. But right now, it certainly likes the long position on this pound CAD as we're coming into the new part of the U.S. trading session. So let's see over here what this one looks like as well. Oops. Oh, it's already active. Oops, dang it. What am I doing? I meant to click this button and I clicked save. There we go. Over on the pound yen, it's wanting to hold on to a short that it took just a little bit ago. So at the 8 o'clock hour, it took a short. So anyway, that is it. We'll be talking more about the NeuroTech software here in just a bit. So I think we've hit everything I wanted to hit. We've talked about what's happening in the markets. We've talked a little bit about breakouts and how they work, just to lay the foundation. Tomorrow we're going to get into actually looking at placing. Tomorrow we're going to get into identifying the channel, talking about different time frames, talking about levels of risk, and then placing some breakout trades and showing how that's done, how to build out that actual trade. And then as far as the NeuroTech stuff goes, I will be getting you guys a video about it today, and from there we will be continuing to grow as far as NeuroTech. NeuroTech's going to kind of have its own stuff. I'll still talk about it every morning and talk about what we're doing with it and how we're doing it, but the specifics on NeuroTech and utilizing it will be in separate webinars and separate training sessions that'll be in the members area for NeuroTech. So later today, for those of you that have already found NeuroTech on the website, I will have the setup video and that initial learning and use on there. All right, so that's it. Have a great day.